Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today, futures were up about 10 handles, and then we finally had a gap and go that the market's been waiting for. Nice follow through to Friday's outside reversal. Nice follow through / commitment to the red dog reversal, if you want to call it that, the hammer bottom, the calculated trade that was great on active time frames as well as for the swing trader that wants to measure it and keep it moving. Listen, you never know where the market's going to go. You have to just have a plan and you have to have a system. Same way when we broke below, just say 1430 on the S&P, you didn't really know if we were going to go down to 1350 or 1370 or 1403, all those levels, or maybe even below 1350 until you evaluate the action along the way. And then once you see a pattern set up at a key level and indicators come together like the 61.8% Fibonacci retracement, a red dog reversal, an outside day, you put it all together, you put the trade on, and then you measure it thereafter, doing it based on your risk and your time frame. Now, if you are constructive on higher prices and you got long on Friday or got long today, this is what you wanted to see today. You wanted to see a gap and go, some commitment, some power. Now what you want to do is you want to see a little sideways action, a little digestion. Then we get another day like this, and I bet you IBD puts us back in a confirmed rally. But right now, all you have to do is make sure you have a plan. If you take a look at the chart of the spiders, you will see that here is your red dog reversal. That happened on Friday. It happened after a move that took place to the downside, breaking this trend. This was a trend that was intact since June 4th. This was a really nice spot to take off risk. This was around 144. This is when the complexion of the market changed. It actually changed right around here. Then you broke to the downside, little bear flag. Here is your follow through downside after the election. And if you sold correctly here, or maybe even got out of the way there, you perhaps were thinking clearly on this outside reversal on Friday. I know guys that follow my virtual trade floor saw us get long, me and Mark and a few others, right around this inflection point. I think I got involved a little bit late, but we held it today. You had a nice gap up. So if you look right here a little closer, just so you can identify it a little bit better, what I want to see now is I want to see a little sideways action. I want to see this gap hold. I don't think we're going to get another huge day like this, but we might even get up a little gap up into this area. But overall, nice day and a half move. Typically what you want to do is you want to see some sideways action. So there, you could see some relative strength, see some stocks start to show their face so you can put together a portfolio if that's the case. And then perhaps, we get a nice little, sideways action to then clear this 139.20 to then get a move back up to, the 140 area, and then we'll keep measuring it. Now, if you want to take a macro step back, I talked about this morning, just showing you the possibilities here. Okay, here is your October 4th, outside day. Or if you take a look right there, what happened there, just to show you criteria of what took place so you can measure it. Similar situation, right? Here was your outside day. Okay, let's get there, sorry. And then what happened? You had a quick 3-day move away from it, showing some demand. Then it held higher, and then we broke a downtrend that continued. Look at June 4th. Wasn't as powerful, but similar situation, right? Here was your outside day. Right here. Didn't close out well that day, but it didn't have to. It actually opened down. You could have bought it when it went above that high at 128.74. But what happened? Okay, big, here's a day one of follow through, another big day to get out of that area, and then you had a pause into resistance, and then what happened? It held higher. So even if you missed, this 3-day move, because a lot of people missed Friday into today, not a lot of people in our community, everyone was kind of high-fiving at the end of the day. But anyway, here was your commitment. And then you had a nice uptrend into finally, the September 14th high before breaking this downtrend, right around here, into what just took place. Sell some risk off, sell some risk off. Here's your chance to, to take the luxury to buy back. And now what happened similar to those other outside days? You saw a gap up, you saw a close near the highs, some commitment, some follow through. That's what you want to see. So now we'll see what happens the next few sessions. So overall, if you book some of the trade, they can't take it away from you. If you bought some spiders and positioned in a few other things, because there was a lot of things that had outside days. I just happened to be at a trade show in Vegas, so I couldn't spread myself out. So I chose what I know how to do and what I follow closely, which is spiders, Apple, and a few others. If you trim some today, you time the market. Imagine that. Everyone says you can't time the market. Well, you did, and you did it with a plan. You look at Apple. You didn't know Apple was going to have a huge move the way it did today, but again, you didn't have to. Here was your outside day. This was the plan. Some guys bought it off the low and actually had better prices than the Red Dog reversal. Red Dog reversal happened right there at 522.62. I know some people were scared about the size of the travel range because this is such a big stop. But if you think about it, this was like a $13 stop. It came down $200. So you were risking $13 to potentially make a nice snapback. So here you go, nice wide range bar, broke through this resistance area, showing some power. I came in today, I was thinking maybe 550 before the day started, and then it actually became a better trade at 550 again, which I'll get into in the 5-minute version of it. And then it closed well. So the next point of reference is right here, right? This is your 574, then you have a gap fill at 580. So we'll see, maybe we get a little bit more follow through tomorrow. Hopefully you took some off into this. I went out long, but less than I had overnight because of the size of this move. Holding some, get a little gap fill, then we figure it out. Then perhaps it can go sideways and we can get another nice trade. If you look at the 5-minute chart here, you will see that you did have your gap up right there, little flag, went up to 550, consolidated, went sideways. So if you did not have it long overnight, saw the gap up, said, oh my goodness, look at the pent-up energy here. I didn't take it. I don't take overnight risk. You could either went fast and got involved, but that was also hard to do. And then once you saw it consolidate and you look at this, it held higher. Let me show you a little bit even closer. If you look here, this was your initial move. Then it held in an upper channel showing commitment, didn't pull back. You could have had a nice day trade at 550. 550 is when it cleared the opening 60-minute range. And from there, you had a quick move to 555, which was another little pivot. And then you had to move to 560, retested it. And then it closed really well up at 565. So even if you do not take stock overnight and you did not go long over the weekend because you were a little bit scared of risk, you had another entry around 550, which could have made you another 14 points or so. So there was opportunities on both time frames if you had a plan. If you come back to me, if you had levels, if you knew that 550 to 554-ish was an area that I tweeted, and I actually said, that objective could happen. I talked about it in, on the virtual trading floor. I'm like, that could happen, and it happened fast. So then that became another pivot for another objective, which was the 562 to 564, which happened. And then it actually took that out. So it showed power. So this power right now, I think, should get this stock higher. Doesn't have to be tomorrow, but there was enough there that it should continue. So you go back to the chart one more time. I would think that perhaps if we get a little bit more follow through tomorrow, this will be a spot where you could take some off, and then with a little sideways action, maybe it reclaims a 200-day, and then it can continue. And perhaps even see, this little area right here, which is about 610. But we'll measure it along the way. As far as some other sectors and some other trades, the banks participated pretty well today. The home builders opened up, but they traded off the highs. It was hard. It was definite a have and have not tape. A lot of guys who tried to enter other positions, some of them didn't close on the highs. But if you take a quick look at the XLF, you will see, pretty strong, right? If you had your upper level stop right here at the 50-day and you saw the outside day on Friday and got long, you made some nice money. Now it might go sideways right into this moving average here. We'll see what happens right over there. If you look at the XHB, you will see that it did try and tail through, all right, these moving averages, but didn't close that strong, which I still think it's fine. Held big support. Actually on this, if you look at strength here, on Friday, it didn't even make a new low, and it closed above the Thursday's high, which showed you some power, which showed you the relative strength to take some besides some of the stocks. And now it's going to pause in front of a broken trend line. A lot of resistance always happens right around there. If you look at the RTH, you will see it came, gap up pretty clean, closed near the highs, so that can continue. Some stocks had some decent action. Look at FDO. We were looking at this today. Nice clean move above the moving averages. This is something you could see if it continues through the holiday season. Target actually acted pretty well, right? Closed near the highs. You have your downtrend right here. This is something to put on the radar for potential in motion if this market wants to keep going to the downside. Walmart, a different type of trade, held the 200-day. Sperling was talking about it in the chat room, on the virtual trading floor. After reaching our objective of 75 to 77, which happened to be the highs, which, again, I put out there in December. You never know what's going to happen, but that's why you have levels. breakout failure. And then, here is a nice little red dog reversal today, where if you sold it correctly into strength, or maybe even sold it when it looked like it was starting to break down right around here at 75, because that did break the small little trend line, you had the luxury of rebuying back here at a nice discount. So we'll see what happens with Walmart. We'll see if it could trade into this gap, and then we'll be able to measure it. As far as Qualcomm, wasn't ready to break out yet. I still think it's a strong stock. I still think it should be on the radar, but I don't think the market knows whether or not we can get upside breakouts yet. So if we hover in there a little bit longer, I think we could watch for a potential trade above this 63. Facebook didn't get into the gap. Still holding higher. It's on my radar. I was going to enter on weakness today, but I'll wait till tomorrow perhaps. As long as it holds above this 22-ish area, lets the moving averages catch up. I do think we can get another trade into this gap. And that's around 24.25, so we'll see. Bank of America I still think looks good as far as the financials. Just to show you relative strength, it's above the 200-day, above the 100-day, took back the 50-day. So to me, I think that this stock has a destiny next year. 12 to 14 in 2013. So I think it's not going to be a barn burner, but I think it's something you could stay with. As far as trading, Goldman Sachs, decent. It's going to have a lot of resistance right around here. Gold, decent action also. It couldn't get through the resistance we talked about right here. It didn't get through the 50-day, but I think with a little sideways action, we'll have a nice pivot set up to buy when it clears, or if it clears. 168.54. Held above the 200-day. Now it's above this area. If you want to draw a line here to sort of separate this little channel, okay, you have a mid-level channel right here. If it stays in the upper end and shows some strength going sideways, I do think we could take that out, and then that'll be a nice entry. I'm not in gold or the metals. So all in all, I think if you're constructive on higher prices, today was the type of day you wanted to see. I wouldn't expect another day like today tomorrow. It could get a little upside follow through, and then I think we pause and we digest. Digestion would be good. It would let some people get involved. It'll show commitment to the market. Maybe we see relative strength in individual stocks that we could put on as swings, and we want to see it hold higher. We can only judge that when we get some more sessions under our belt. At this point, Friday was day one. Today you had some nice follow through if you were long to trim and trail. I do think you stay with some, and I do think there'll be a lot more opportunities this week. Hopefully you were involved, and hopefully we helped. Scott Redler, T3 Live. The recap's here tomorrow morning with Brittany Umar at the morning call.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.